This is your host, Stephen Sargeant, Around the Coin podcast. Special episode we're going into today. We talked to the CEO and co-founder of Alex, Dr. Chiente Hsu, and I think I got her name right. She's just an amazing energy. She's talking all about quantitative economics. We talk about what happened with Alameda Research and FTX. We go into how she's applying some of that knowledge to building DeFi on Bitcoin. Yeah, baby. DeFi is back on Bitcoin. Bitcoin is back. And she's opening up the whole finance layer of Bitcoin, which is absolutely amazing. She talks about all the different use cases, including stable coins and helping out moms in Nigeria and Africa send money around the world. This is truly an inspiring episode. We even talk about being a woman in a kind of crypto bro society from New York to Hong Kong. She talks about her amazing team and all the work they're doing. This is a really cool episode for anyone in the crypto, payments, tech space, or just the entrepreneurial space. And she's even thinking about writing a book. That's how great this conversation was. I hope you tune in. And let me know if you like it and reach out to Chiente and talk to her about it as well, because this is a powerful episode on DeFi on Bitcoin. This is your host, Stephen Sargeant. This is a special episode of Around the Coin. We're going to be talking about a lot of interesting things, including things like quantitative strategies, which I do very little about. We have Dr. Chiente Hsu. I think I almost got it. She's the CEO and co-founder of Alex. Maybe just tell us a little bit about yourself and what's Alex, because it's funny. I did all this research for the episode, and then I figured out what Alex stood for, because it wasn't obvious right there what Alex actually stood for, and it made a lot of sense. So maybe tell us a little bit about yourself.
Sure. Thank you for having me, Stephen. About myself, I was born in Taiwan, Taipei, by Chinese parents. Then we moved to Vienna, Austria, really very early on. So I was educated in Austria, Vienna. I got my PhD there as well. Then I was in academia. So I was 2 years professor at Duke University and also University of Vienna. Then the investment banking called because of money. I joined investment banking. That was the interest term of, I would say, finance, quantitative finance, because of my background. I have a PhD in quantitative economics, econometrics. So people like to use my skill set to forecast, to predict. That's how I joined investment banking. I started at the Credit Suisse First Boston. Then I was running the Quant research there. And then I joined Morgan Stanley doing the same thing. And a little bit more than 3 years ago, I started with my two co-founders, Rachel Wu and Chang Ang, this DeFi project called Alex.
That's super interesting. Can I ask you about the transition from Vietnam to Austria? Because that seems like a huge culture shift. I could be wrong, but what was that like? Because it seems like you're a fairly young age when you made that transition. Was it like, oh my God, we're moving to this, distant country, or was it a smooth transition for you?
Oh, absolutely not. Number one, I was a teenager, so it doesn't matter. Motivation from the next block is challenging. This will be from Taipei to Vienna. The climate is very different. I remember when I moved there, it was deep winter, so it was really hard. But I think the second thing is also the language, because when I moved there, I did not speak a word of German. And that's really came to my passion about, math, statistics, is that I remember I had to learn German from the scratch, and then went to school. And when the professor was telling a joke in the auditorium, I had no clue why everybody was laughing around me. But as soon as some equation was written on the, whiteboard, my hands there's, self-enforcement about this, and I got more and more interested in quant.
So you just stayed on the math, right? Anytime talking language, no, anything math, you just went to those classes. Was there a community for people like, I know I would live in Toronto, Canada, so we have these like little Portugal, it's a little Chinatown. Like there's these areas where people from the same community from other countries tend to segregate and tend to aggregate. Did you have that in Germany, or was it like you were just kind of pushed into a completely different culture, or did you have a small community of other people from the same country?
Right. So Vienna is a very small city relatively. I think it's a little bit more than 1 million population at that time. So there was also a very small Chinese, Taiwanese, overseas Chinese community, and definitely we tried to, be close together to each other as possible, but also because I went at a quite young age. And as soon as you got yourself immersed into schools, then universities, suddenly, I'll say your culture become less and less obvious, right? You just almost completely immerse into that, that particular environment that you're growing up with.
Are you fluent in German, or did you pick
Yes,
up a?
sir.
That's super. Do you ever use that today? Does that like benefit you, like reaching out to like maybe German investors when you can, make a funny slang term or say something?
Yeah, people obviously know with me. I don't look like Austrian. By the way, I'm Austrian citizen. Sometimes when there's like investor or partner, they are German, and I suddenly speak German, like we guess. They are like, what?
That's amazing. I always wish I could speak a different language. So when people were talking in their native language and they think I could understand it, like I could come in with a quick with a like a witty comment. Like obviously you're in computer science very early on. You're very mad. When did like Bitcoin, cryptocurrency, that usually hits the tech people a lot way before it gets to the outside community. When did you first hear about, Bitcoin, cryptocurrency, blockchain, Ethereum? I don't know what was first for you. And in what context was it in? Was it like, hey, this is a new way we can send funds to, another developer around the world? Or was it like, hey, look at this new technology. It's going to change the world. Like, what was the context you first heard about this technology?
Well, I heard about Bitcoin relatively late compared to other people. I think it's around, late 2010, 11, 12-ish, I would say. So
That's
really,
super. I
no,
thought you
you
were going to
just
say like 2017, 2018. You're like, yeah, like maybe a month or two after the white paper came out.
But I absolutely didn't appreciate it at that time, right? You just, okay, I heard about it, think an interesting white paper. But then, then you look back and you think about what has happened to me in my particularly TradFi experience. And then a few things I remember really, really well. And then you combine that with, Bitcoin or blockchain in general, right? What kind of, problem it could solve if we had that at that time. So, for example, the 2008 financial crisis, right? I was on the trading floor of a Credit Suisse in New York, in Madison, near basically on Park Avenue, around 25th Street at that time, on the trading floor of fixed income. What happened, I still remember the atmosphere and also almost like the smell of it, right? You sat there in the middle of the trading floor and suddenly one bank after the other failed, right? You wouldn't know this particular bank, how much risk they have about all these, shitty credit derivatives. Nobody could price it. Nobody knew how much, how many dead bodies were in the cellar. So from one bank to the other, you hear that, okay, let's not trade with this bank, but not trade with the other bank, right? So you start one after the other, and that's how the financial system grows. And then, so that was 2000. And then afterwards, you look at this white paper, you look at the blockchain technology. At the end of the Bitcoin is really a completely decentralized open source ledger, right? Where you can store information in the most decentralized way and also most immutable way, right? You think about, okay, if, all this information about banks' risk, about their holdings, and where all this can be, I know it's a very ambitious and we are far, far, far from it, right? If this can be a way that we can build a bank on this public ledger, right? We won't freeze. We wouldn't have had this, the great financial crisis. So that was the first time kind of link the TradFi, particularly in the information asymmetry and transparency part, linked with the blockchain and linked with Bitcoin. And really, during the ICO period, this crazy Ethereum was really about almost a test about that era. I remember my son at that time, a few years old, came by and said, Mommy, you have this coin, that coin. I was like, son, put all your saving in S&P 500.
Can I ask you? I want to interrupt. Can I ask you back? You said it's so funny. You said you smelt that day, right? When it's how I feel about 9/11. Like everyone remembers where they were and like the smell of that day, right? Because it's so devastating. Were people or organizations or you're looking at you like, hey, how come you didn't call this? This is what we have you here for, is to understand the economy and to know the numbers. Were they kind of looking at the quant teams like you couldn't predict any of this? Or were they like, hey, we know we messed up. You predicted how the economy should have went and we still over leveraged ourselves. We got greedy. We went after something that looked good financially in the short term, but wasn't long term. I always wonder when they're looking at when something goes bad in the economy, are they pointing fingers like, hey, where were you in this? Did you take a lunch break in 2008? Like what happened?
Okay, so it's a very fair question, and I had two ways of answering. Number one, quant is not magic, right? Quant is not a crystal ball.
Right.
So what is a quant? That came to your inherent curiosity about quant, right? So I will summarize in the way that, the world is very complex. Every day we generate all this data, this footprint, and every day there are certain things happen in the world. What quant does is to, I would say, particularly in the quant of prediction, in the world, in the jobs or work of prediction, is that you summarize data as much as you can to filter out the noises, and you establish causality. A, B, C happened, then D happened. You establish the strong causality. And then when you see the same pattern happen again, so very likely you want more than 50% of the likelihood, right, that this happened again. And you bet on it over and over and over again. So that's really what quant is about. It's not a crystal ball. So that's number one. So
could I summarize that? It's recognizing patterns, history repeats itself, and when you see a similar pattern, taking advantage of it based on historical information and the way you see kind of like the ecosystem as it is today. Is that a good summary? That's
causality.
Perfect. That makes a lot of sense. Yeah, you're using big words. Yeah, I'm taking down to the words.
Oh, I'm sorry. Just yell at me if I use big words. So causality basically means A happened, then B happened. And not because A and B at the same time correlation, not at the happiness. And correlation doesn't help you. But causality helps you because you see A happen, then you are very sure that B will happen. So that's a causality. So number one, the great financial crisis, we didn't have that in history, right? All these instruments, credit derivative to the square, to the whatever power, they were all new. There were no proper pricing models for it. We didn't know how to price it, right? You only know how to price a risky asset if you know how to hedge it perfectly, right? Because that's what we call it. That's another type of quant. We didn't know, right? There's no hedge. Because this is just brand new instrument. Everybody was going after that, and then it blew up. So there was no history about that. Second thing is that there's no data or information about that either, right? As I said, we wouldn't know what bank A had really in their cellar, the dead bodies. So nobody knew who is doing what, how much. Right. So that's the second thing. But so that's where I would answer is that quant couldn't have predict that because we never seen the history. We didn't have the proper data. Right? We didn't have the proper information. The second way I would answer is that quant are mainly for things that happen often and frequent, but those people who called it short, right? In the history, particularly in 2008, you remember the film The Big Short?
Yeah.
Right? All these heroes, they were heroes because they called that in a certain very short period of time in that particular history. The rest of the time, when things are working really, really well, you don't hear from these people. They were not heroes. On the contrary, they lost money.
Right.
Why? In order to short something, this is very, very expensive. Think about it. It's very easy to say, oh, I want to short, Nigeria government bond. But in order to short that, let's say Nigeria government bond, I'm just making that, give you, let's say 10% yield, right? It means that you have to pay this 10% yield, which means that you have to be sure that your bet is already above the 10%, right? So that's the cost you have to bear as a short person. So quant, in order to have a quant system to call it short, your signal has to be much, much stronger. So the conviction has to be much stronger. So most of the time, people call it short. Most of the time they are wrong because most of the time we are not in crisis, right?
Right.
You only have those.
In that 10% example, you're betting it's going to go to like -5. So you have to have that 15, that 15 points. You have to get it down to 0. Yeah, that 10% has to interest rate or whatever has to be a rate.
Yeah.
And then it has to drop, which is like a huge bet. So to your point, that only happens once in a lifetime that you're going to make those funds on a huge bet. Now that I understand quant so much more, how do you use it to something like the crypto market? You've been through, several bull markets, several bear markets. You kind of see like the NFT trend look very similar to the ICO trend, right? You kind of see those same things that you were using in traditional finance. You're like, oh, I've seen this before. This looks very similar. 2021 looks good, and there's a bunch of money pouring in. But like, did you kind of think that it was going to kind of level off or at least get to the point? There's people that historically said, hey, when there's all this money going into greed, which is what the NFT market is, 99% of those projects are going to go to 0, or, to your point, that it's easy to short those projects. What are your thoughts with how you can apply quant to or how you have applied quant to the crypto market?
Again, a good quant signal relies on, enough historical data, right? So I think crypto is still, particularly the crypto market, is still quite young and short, and volatility is still very, very high. So it's hard to apply systematic rules onto it. But there are certain things that you could see it from the traditional, you can kind of draw the analogy. So for example, arbitrage opportunities, right? That's very simple. You really don't need quant for that. You say, okay, if a certain, let's say Bitcoin was, you remember the kimchi trade? So the kimchi trade is how Alameda made money, right? In the very beginning, between, I would say, 19 and 2020, there was some report, I'm not sure it's correct, so just take it with a grain of salt. It's that every day they were making $1 million of
that's the story anyway.
Right, that's the story, right? So thinking about kimchi trade, is a pure arbitrage, the purest arbitrage lie in front of you. When Korea market opened, the Bitcoin price would be just on the average 10 to 30% higher than, for example, the US market, right? And so what you could do, let's say in a perfect world without any restriction, you just held a lot of Bitcoin when US market open, and sell it when the Korean market open. You make 30% of it, right? Now there are a lot of, obviously, friction around it. Number one is, your certain capital you have to put in order to make sizable profit. And number two is also, the alpha would die out because everybody know you can maybe trade. Everybody going to the trade. So the trade will be, we call it crowded. So alpha will be crowded out. So this is you don't need quant for that. It's just an arbitrage opportunity.
And to your point about quant, like, it's so funny that Donald Trump saying they're going to do something, even though they don't have the power to do it, is enough to kind of shift the market. Where that can't happen in traditional markets. Like, you'd have to sign a bill, you'd have to go through a legislative process. But like, Donald Trump can tweet that he's going to fire Gary Gensler, and then all of a sudden, like, the market will shift. There's still so much sentiment in the market versus, to your point, actual and then when you break it down, it's like, 15 years isn't a lot of historical data, and it is quite volatile. Even though it seems like it has cycles, it's still, very volatile. And I think to your point, that makes a lot more sense why we can't really predict the market, because a simple tweet can skyrocket Dogecoin, but that can't really happen in the traditional market. There's more guardrails. Like, you can't just say something like that without implying, without triggering, without knocking at the door of the Securities Exchange Commission, basically, is what I'm trying to say.
Absolutely. I mean, in the TradFi, news and whatever a CEO says, much more regulated. Remember what Elon Musk said about Twitter, fund secured, right? Got into trouble with SEC. Whereas in crypto, it's still almost like a wild west. Everybody can tweet something without any consequences, but also because of its decentralized aspect of it. We know obviously you can use models, you know, Twitter, everything, you can use this API to extract the signals out of it. But right now, I think it's still very, very noisy, right? It's not just about, okay, to buy. I think it's also about, you know, the timing of it, how fast this, you know, rumor effect will go down and how to size it. That's two very, very important questions in quant trading. So it's not just about, I'm going to buy this one. It's also about how much should I buy and when should I sell?
Right. Yeah. There's a lot more. I think the crypto market just worried about buying, and that's how we got in trouble. We just bought thinking everything goes up, but when everything goes down, we're like, how come we're still holding it? Like, yeah, we're like, hey, we didn't get that. We didn't take. We kind of dropped out of that course. You know, we took the course on how to buy, but how to sell at the right time. We kind of like, yeah, let's drop out of high school at that point. I want to jump into Alex because it's so interesting. You've been coined, and you coined yourself like the finance layer of Bitcoin, and that's first of all, whoever your marketing team, or if that was you, that's such a powerful statement. The finance layer of Bitcoin. I love that. When I saw that, I'm like, oh, I'm gonna start just using that in sentences. Explain Alex to me as if, you know, I'm new to crypto. I understand a little bit about how traditional markets work. We have a lot of payments, tech, and crypto people that listen to this podcast. But I think when we get into the nitty gritty of like protocols and layers, it gets a little confusing. Can you explain what's the current layer of Bitcoin, and what's the finance layer that you're bringing on top of it?
Okay, I love that. Okay, when we say it's a finance layer on Bitcoin, what it really means is that, forgive me using Wall Street analogy, is that we try to build a entity, or let's say a bunch of activities on Bitcoin blockchain. And these activities are financial activities. Think about what the big bank like a Goldman or Morgan Stanley do, right? And I think that's where we kind of differentiate ourselves from other developers. Look at so for example, Goldman, Morgan Stanley. You have the primary market, that's IPO, right? So let's say Stephen has this great marketing firm, but you want to attract capital from the market, right? You go to Goldman, you say, I want to IPO it. So Goldman will help you to IPO with a very happy fee, obviously. Then, but after Goldman IPO your project, Stephen's Web3 marketing firm, you need to make sure that there's sufficient secondary market with liquidity for Stephen's, you know, equity to trade, right? So that's a secondary market. That's what we are talking about in decentralized finance, you know, decentralized exchange. We call it DEX or DEXs, right? That's really the secondary market. Okay, so you have IPO is very similar to IDO, right? The secondary market, like trading, that's just like DEXs in decentralized way. Now you think about it, but you know, I am Goldman Sachs wealth management client, right? I want my saving to generate some yield, right? So Goldman Sachs has to come up with certain, I would say, a product for me in order to get a yield. And other people say, yeah, but right now I need capital, so I want to borrow, right? So can Goldman Sachs then lend me those money and I pay yield? So Goldman Sachs, right in the middle, create certain financial, I would say, structured product to meet the need of both lender and borrowers at the
They're the matchmaker, right? People need money from them, and people are like, hey, I got money, but I need a couple points on this. I need to make a little bit of yield, some interest rates on this. And that's what they do best, right? They bring in the people that need the money, they match them with the people that hold their money there for a number of different reasons, and then they take a small cut out of every transaction.
Right. Okay. So now come back to, what if you can build all this on Bitcoin or on the public blockchain? Wouldn't that be beautiful? Because it's decentralized, so it's also immutable. So why these are important characteristics, right, for financial services, financial inclusion, right? I mean, if I want to be a Goldman Sachs wealth management client, I think at least $1 million you need to have it, or maybe now it's a bit lower. If you want to IPO through Goldman's help, I mean, you know, the hurdle, right, of getting the IPO.
There's a financial obligation. They're not doing it for free.
That's right. Yeah. So, but you know, with all these financial as a fintech, this evolution of fintech, you think about the whole world. We are lucky. You're there where you are. We are both in in the North America space. That we are, it's very easy for us to open a bank account, to have a credit card, to really jump into this bandwagon of a fintech evolution. But if you think about, where my husband comes from, in Africa, right? I mean, you can't. Number one, you can't have U.S. dollar. Number two, to open a bank account is really, really difficult.
Yeah.
To think about for financial inclusion, I'm not saying that blockchain is the only way, because fintech evolution is very fast as well. But blockchain is one way, particularly for cross-border transaction and payment, in order for people to utilize this technology. So blockchain can be an answer, right? So it's
Why
a very
big?
winded way of answering your question.
No,
Why
I
we
think that's
start with
great.
the,
I think I'm a metaphor person. Give me all the metaphors you got. That's how I understand. I visualize the metaphors. But I think the question everyone's going to think is like, well, there's a bunch of DeFi protocols on Ethereum and Solana. Why Bitcoin? Bitcoin's had the biggest issues when it comes to scalability. But we're seeing like Bitcoin's back, baby. So why Bitcoin? Why did you decide to build on Bitcoin? And what are the gaps that you see maybe building in other, EDMs or other, environments that you think Bitcoin is the ideal place to build on top of?
Right. I think, at that time when we, three of us, the founders of Alex Technology, decided to build a Goldman Sachs on chain, there were other chains that trying to woo us to go to build on it. But think about, putting the entrepreneur's head on it, right? You don't want to go where it's very crowded. You want to travel the road which is less traveled by, right? So then at that time, if you line up all the layer ones, right? Bitcoin, Ethereum, at the time, you have Solana and others. You think about, okay, which one is most decentralized? Which one is most immutable? And that's for sure the answer is Bitcoin. And Bitcoin has also the longest track record as a ledger, as a blockchain. So that's number one. Number two is you are absolutely right. Bitcoin, I think most people, you totally understand it by now. Most people still don't know the difference between Bitcoin and Ethereum, right? Ethereum itself is a global computer, is a smart contract layer. So it's very easily you can build things on top of it. Bitcoin is very clunky, very rigid, but that's what people also love it, is that you can't change it and you can't really build directly, financial application DeFi on it. So you need a smart contract layer on top of it. And that's what, we are talking about this, layer two, etc. So it really only happened the past few, I would say 18 months, right? So I would say two things. One is we chose Bitcoin because it's to build the DeFi because of its decentralized immutability, but also we chose it as an entrepreneur. We need to make a bet. Where can we be most successful and really make an impact on it? I don't know. There's no point to build another DeFi on Ethereum. There are too many of them already. Build on Bitcoin and grow with the technology evolution, but also learn from Ethereum what are the real use cases, right, that people really want to use. Filter out those that died already, not very successful, and build that on Bitcoin.
What are some of the interesting characteristics where you're like, oh, I'm gonna borrow this from what is being built on Ethereum, or what's some things you're like, oh, we're definitely doing this differently because we don't like, whether it's successful or not, we just don't want to do it this way. Whereas there one or two things that you're like, hey, I really want to adopt this onto Bitcoin, and hey, this is not going to work on what we're doing. Let's leave that out.
Right. So if you look at what has been successful in crypto as a general, as a proven use case, so that's number one, proven use. And second is what kind of functionality you need to that the user really, really want to use, right? So the proven use case is definitely a stable coin, right? So at the moment, obviously the biggest stable coin are USDC, USDT, and then Binance has its own stable coin. JP Morgan has its own.
PayPal's coming up there now. PayPal's getting a little bit of a market share now.
Right. JP Morgan has its own, coin for the cross-border payment. People don't talk about it, but when JP Morgan CEO come out yell at us, crypto again, I have only one sentence. JP Morgan has its own coin. That's the use case, right? So that's the use case. We know for sure that it helps the financial industry or the sector or services, and that's a cross-border payment via stablecoin. So we are very focused on that. For example, if you can issue stablecoin on Bitcoin itself directly, right? You have the beautiful chip which is completely decentralized, but you can issue asset, in particular stablecoin on it. So that's in our roadmap. But number two is also, what are the functionality use cases that you need to have in order to, enable this Bitcoin economy? And that's really decentralized exchange, right? People like to talk about real generation, DeFi farming. These are all good, all very exciting. But if you don't have a well-functioning liquid exchanges, none of this will exist.
Yeah.
Correct? Right. So we very much focus on building across, I would say, multi-chain, including Bitcoin and all the Bitcoin L2s, decentralized exchanges with all the technology that other people really invented, Uniswap. Right now, Uniswap has this Uniswap versions 3, which is a combination of, I don't know, we can talk about that more later, like about the AMM plus order book. And that's what we are trying to roll out very soon. So I would say assets issued on Bitcoin use case because for cross-border payment. Decentralized exchanges.
Your core team is from the biggest banking institutions around the world, obviously in the US, but they're probably some of the biggest banking institutions, JP Morgan, you've already mentioned, and others. The one thing about them is like their transactions are private, right? You're not going to be able to see if, you want to invest in another financial institution that you have to send funds. You're not going to see that. They could do that transaction and announce it after. Do you see institutions using, the finance layer on Bitcoin because it is transparent, and you see these watchdogs on crypto Twitter, they're watching every big transaction that moves on Ethereum or this place or other places. How do you balance that transparency that is, locking in the security of Web3 with the hey, I'm running a business. I don't want to see people see how much I'm receiving or how much I'm sending.
So number one is that you can build, definitely if you are an institution, you can build your own chain, right? On top of Bitcoin or Ethereum, right? That's, I think a lot of institutions are currently doing that, such as BlackRock. So there's certain things you want to be completely transparent because it's for your users, the investors. They want the full transparency.
Right.
And certain things you want to have the privacy because you don't want people, for example, to front run you, right? So the blockchain technology enable you both. You just have to choose, for which particular use case you are looking for. For us, we try to build something that's really for users. So for the full transparency, such as DEXs, that everything you can see, you can trace the, on-chain data is the most transparency you can see.
Yeah, that's true. And yeah, for the average user, they want to see that transparency. And I think this is where we kind of run into the industry with FTX and Alameda. Is like when you don't see the full picture, there's way more carnage. And we saw that in the 2008 financial crisis. When you don't see it, there's way more carnage than someone just seeing it. You send funds to another business. That's not as, I think we prefer a little bit more transparency than private transactions and we don't know the risks. What are some of the big use cases that you're building on, Alex? And how can users get, involved in that?
Right. So right now, we probably are the biggest Bitcoin DeFi project, which means that all the transactions that Alex, the protocol has are settled on Bitcoin. So people can trace that completely transparently. And also people know that that's immutable. How really our ultimate goal is really to build all these financial service on this particular chain, that's Bitcoin chain. Lots of hurdles, obviously, as you like to say so. We have to grow together with all the smart contract capabilities. That's number one. Number two is crypto itself at the moment just its own sector, right? So we just in our own sector, the capital is because of the ETF, it has become a little bit better. But the user friendliness compared with the TradFi's fintech service, we are far from it. So that's another thing that we as a project need to pay more attention, put more resources on it. Like my mom wouldn't use Alex. And you start having a wallet with all these private keys, right? And then you have to wait. Bitcoin is, block time is very slow.
Right.
All
And is
these
that the
kind of
goal for someone like your mom to use Alex, or someone like me that's in the space but not really 100% going on there, in the order books? Is that the goal, is to have everybody be able to kind of get in there?
right. The goal definitely is that because of the financial link. But the first really ultimate task is that if you look at the Bitcoin, so many people are currently holding Bitcoin on centralized exchange, right? How can you, number one, give them the user friendliness that you can use, Stephen can use. Number two, give you the use case. Why do you want to move your Bitcoin from your centralized exchange to, on-chain to a DeFi project, right? So you need to give the use cases. So I would say these are the two ultimate tasks that we are racing towards to fulfill.
Can you talk to me about, like, Bitcoin ordinals have completely skyrocketed? That's what everyone's talking about. On your website, you have BRC20 tokens, and people are used to ERC20 tokens. So can you kind of break down what those two things are and why they're very interesting on Bitcoin versus like a similar product that you see on Ethereum?
Right. So they go back to our discussion in the very beginning that the Bitcoin is, the code is very rigid. And in order to change it, and also because of decentralization, whenever you want to change or upgrade, take years, right? You have all these developers and they have to roll whatever, right? So it takes really, really long for any upgrade improvement. I think with this BRC20 and the rules, Ordinals BRC20 and rules at the order of the progress, suddenly open people's eyes that you have a way, because of the last upgrade of Bitcoin, the Taproot upgrade, right? You have a way to issue assets on Bitcoin, the chain itself, just like what you do on Ethereum. The ordinal is like those digital art, right? Then BRC20 and the rules are just different token standard, but you can issue asset on Bitcoin chain itself. It was not possible before. I think that was the excitement that, wow, we can issue asset. Of course, all the DGen, they start issuing all these weird token with weird names. They get very excited. They gamble on it. It's like a big casino. But away from the noise, if we see that we can issue assets directly on Bitcoin, that's a very, very powerful event, or let's say a very powerful progress that we have experienced over the past, 18 to 12 months.
That's super interesting. One thing I did see is the Bitcoin, you're building almost like a Bitcoin oracle, which I think is very interesting, especially with DeFi, right? DeFi needs real world, prices. They need real world data accuracy. Tell me a little bit about how a Bitcoin oracle differs from maybe what you see at Chainlink, or maybe why it's the same and why it's a lot more interesting on Bitcoin.
Right. So in order to transact accurately, you need the accurate data. And that's what Oracle is about. It's about the accuracy of data. And the problem with Bitcoin, particularly if you look at like BRC20 and other token standard, is that the Bitcoin itself is very primitive. You can send and receive, that's it, right? But it doesn't really have you cannot really properly record in this ledger like what you do on Ethereum. So those token standard that we just discussed about BRC20 and others, they rely off-chain index. Off-chain index could be somebody just with his Excel spreadsheet that's recording all the transactions, right? So it means that if you are here, you record your transaction, the other person is there recording her transaction, maybe there will be some conflict, and then suddenly the bank account don't look right. So you do need a place where, almost like a place where you can say, okay, this record is correct and this record is not. And that's really what the Bitcoin Oracle is about. Is a on-chain, I would say, data as well as a messaging verification place where you can verify the correctness of the transactions on Bitcoin and other Bitcoin L2s.
is it hard to create an oracle? Because I think, we had somebody from Flare on another podcast, and they're building, their oracles on EVM, but they were saying, hey, a lot of these, Oracle service providers, they're only getting input from 2 or 3 data sources or data service providers. That's not really decentralized, right? When, like, you have to have, 50, or you have to have so much input and then take a consensus from all those inputs. Does that make it hard for you to be able to vet or figure out where you're pulling that data from and getting more people to contribute to that data so it can really be a decentralized data information?
Yeah. So, the decentralization doesn't happen from day 0, right? You need to start with a few really, solid partners. And we were very lucky we're in this ecosystem that I think we grabbed in the very beginning 5 really, reputable partners to start building with us. And they are the investors and they will contribute. And then you need to start to centralize. You need to give people the incentive so that they will contribute to their data to you. And then there are different ways how you can, there's always a trade-off between speed and the security. So I think we took a very pragmatic way is that, you can choose, what trade-off you want to do, right? You want to the ultimate security or you want speed. If you want speed, you are sacrificing some security that you just mentioned, right? Maybe you have only a few indexes that contribute to this particular data.
It's so interesting. Yeah, it's always like this triangle of like speed, security, and cost, right?
Yeah.
If you want something fast, it's not going to be secure. if you want something fast and secure, it's not going to be cheap, right? So it's like you're always trying to balance.
You've got to balance. I think most important thing is also to, in a very transparent way, to share that what are the things that you're sacrificing. You can't tell people you can have your cake and you also can eat that cake.
Yeah. I want to talk to you. We talked before the show, a huge Asian presence in the APAC region. Talk to me about regulations. We've seen the EU come out with the MiCA and, significant and most comprehensive regulations, I think, to date when it comes to digital assets. But we're also seeing places like Singapore and Hong Kong. And it seems like all regulators are trying to get crypto inside, but they're also sweeping in and, DeFi under their umbrella, or they're going after developers and enforcement actions. And we just saw, the developer of Telegram get arrested. Talk to me about what your thoughts are on regulation.
Right. Again, I come from TradFi, same as my co-founders, Rachel and Chan. Ultimately, there are 2 goals of any financial regulation, right? Number 1 is that those financial regulations try to prevent systemic risk, right? Number 2 is they want to protect the retail investors, moms and pops.
Right.
So this really, I think if you look at any financial regulation, it comes boil down to these 2 goals. So now comes DeFi, right? Number 1, systemic risk. By definition, it's DeFi, right? So if you look at FTX, not DeFi. You look at Celsius, not DeFi, right? If you look at Terra Luna, yes, DeFi, but it did not create systemic risk, right? So by nature, DeFi, the big project, the way it's designed that you won't create systemic risk. So that's number 1 about the regulation. Number 2 is about protect, retail investors. Yeah, I totally welcome those regulations. Our industry, our sector is so young, and I like to say it's wild, wild west. A lot of those, we depend on our own self-regulation. Where the team comes from, we are very, very focused on this part. But, there's just, I don't know if you are aware of the FINRA, this financial regulatory entity that the TradFi has, right?
Yeah.
It comes from the industry's own initiative. So all the, banks and the financial institutions, they come together, they say, we establish our own self-regulatory entity, And then with the communities, force, we can enforce certain good behavior and then, filter out certain bad behavior. And I really, really, really hope that the DeFi one day will have our own FINRA, right? Because we are all developers. For moms and pops to understand, this particular smart contract likely to have a rug pull, they won't know. These people,
Right.
they will just hire lots of marketers on Twitter, right? Just pump those tokens. Whereas ourselves, the builder in this industry, should call out each other, right? This one is likely to have a rug pull because of this particular part of the smart contract. So yeah, I think that's the way to go, is instead of the big brother come to write a proper set of regulations that is completely adaptable to DeFi, it's going to take very, very long. Right?
And they don't know the protocols. There's very few.
No.
There's very few private sector people. We were just speaking to somebody in Dubai that is now with a regulator who was in the private sector, but there's very few private sector that go into the public sector and then educate them on the protocols. It's usually and when they do have smart people in the public sector, they're attracted to the money of the private sector because everyone wants a former regulator working on their global regulatory affairs, in their protocol. But there's still about $3 billion in 2022 alone that was due to hacks and Oracle manipulations and flash loans and vulnerable contracts. What do you think the industry needs to do? Or you can speak for yourself. What is Alex doing to, as you said, you invite regulatory around consumer protection, especially with retail customers. What are you doing to make sure you protect your funds? And what can the industry do better? Is it the audits? Is it multiple audits? Is it, pen testing before you go live or simulated environments? Where can the industry do better so we're not losing $3 billion every year due to what many are saying is a lot of negligence and the rush to get the product out first versus to get the product out safe?
No, I totally welcome this question. And I think also, as again, it's a very young sector and it's full of entrepreneurs like us. Very often as a startup, you do need to push the limit, right? You need to push the boundary because you need to, invent, roll out products. And sometimes you will sacrifice, part of the security. The way we do it now, Alex, we learn a very big lesson. There are a few type of hack, right? One is very traditional Web 2 type of hack, like phishing attack, that we were a victim of it, right? So this, we just have to hire. We have to hire Web 2 expert that have experience in Web 3. For example, we hire Kamal Security, making sure that everything we do is to the highest security standard in terms of deploying smart contract, et cetera, et cetera. Number two is really on-chain. So on-chain type of security, you need to monitor it. Again, you just got to put part of your resource, your money onto it. So we hire Anceliac, which is a quite famous on-chain monitoring company, monitor every on-chain activity that we have, that the Alex user are deploying. So that's number one, is really Web 2 plus Web on-chain. Number two is about smart contract. Smart contract design, right? This we can learn a lot of from TradFi. For example, what you said about those flash loans, right? People manipulate the price and then go to do whatever, very leveraged margin trade, and then boom, hundreds of millions are lost. These are risk management and smart contract design, right? So these are different type of risk. This, I thought that we are pretty good at it because we learn all this from the TradFi, and there's a lot of things you can adopt from TradFi. It's about risk management, it's about simulation, it's about, sometimes maybe you do want to slow down a bit of your speed. Sometimes you want to verify your pricing data much, much, much more rigorously. So I would say these are two different types of security issues. Now, hackers are always one step ahead of us, right? There's so much resource put in to hack. And I think, after all these incidents, we also have learned to work with other people, right? You do need to work. We work with all the centralized exchanges, right? Whenever there's some really weird transaction, we notify them right away. And most of them are very, very good at it, right?
Yeah.
Number two, you do need to work with other DeFi projects, because think about hacker. Once the fund is in a wallet, they go to other DeFi projects. You need to
DeFi
notify
protocols,
them very fast. Yeah.
instant
So
exchanges. Yeah.
yes, because they want to operate very quickly, or they want to change into stable point very quickly. So you do need to work together, and then not just very, singled out, just doing your own thing. You do need to build your own network. Your protocol need to talk to every other protocols.
I love that. Even when I was an investigator doing blockchain investigations for a large exchange, you would have some of these exchanges that don't, there's groups where we exchange information and they don't participate. And you're kind of like, okay, they care about compliance, but they don't want to participate. But the second they get hacked, they're running to these groups and asking for help. And we're like, hey, well, you weren't participating when everyone else needed help. And now, it's going to take a little bit longer. You don't have those strong connections. You can't just pick up the phone and call another exchange because you don't have those relationships. So it's important to build those relationships, to your point, before there's a problem, because when there's a problem, there's not enough time to kind of execute those relationships. We just had a webinar 2 days ago when Crypto ISAC is being formed, and they're kind of opening up that communication link. One thing that caught my attention was Bitcoin ETFs, because you come from a traditional financial product background. What are your thoughts about the Bitcoin ETFs? You're working in a decentralized, you're promoting the ability for self-custody and decentralization. Do you feel that Bitcoin ETFs gets us further away from your goal, or from what you feel that the industry adoption to self-custody looks like?
No, absolutely not. I welcome so much Bitcoin ETF that I have waited for so long. Because ultimately, we have to be also honest with ourselves. The mainstream adoption of DeFi is going to take very long. There will be just, most people are happy
Right.
holding their Bitcoin via a centralized entity, through ETF. And that's fine. But then the more and more they hold it, the more risk they have it towards it, the more, heavier weight in your portfolio, in your 401k, they will be more curious about this technology. Right. So I absolutely welcome this ETF. And I think, for those pension funds out there, corporate pension funds or sovereign pension funds or family offices, you do need to start learning about this particular asset classes, such as Bitcoin and Ethereum, and make sure you have the proper allocation to it through ETF. Right now, they can only do it through ETF.
Right.
So that's good. People will start having a curiosity. About DeFi, I think ultimately DeFi needs to mature, but in the sense that philosophically, if from the outset you are for permissionlessness, right? You don't want to be assumed as a criminal every time you scream about your privacy or your sovereignty, right? DeFi attract lots of users because of this. And it has to mature just because of its characteristic of the permissionlessness. It's a cross-border without all these inefficiencies, institutional inertia, et cetera, et cetera. Does that make sense?
Yeah. How is Alex going to help that maturity over the next 5 years? How do you think you can redefine maybe the landscape? It's your goal is to get more people, including your mom, including me and my friends. How do you redefine the landscape for DeFi? What are some of the characteristics, or what are some of the levers that you're going to have to pull now in the next 5 years to get that kind of adoption, do you think?
We need to, number one, improve our protocol's user friendliness. Right now, it's very, very clunky. Right? You need to have a wallet, and you need to sign in, and then, people don't know what this DEX is about. So you need to, almost as simple as, I don't want to say, E-Trade or Charles Schwab, but almost like that, right? Very, very easy to use. So that's number one. Number two is behind this user friendliness, there's a lot of infra that needs to be built and need to mature. And that's what we really have been doing over the past 3 years. As you already mentioned, Oracle is a very important thing. We have cross-chain bridge called X-Link, now become the liquidity aggregator of all these different chains. That's very important because as a well-functioning exchange on Alex, you need liquidity. So you can't have very thin liquidity that won't run well. You won't execute your trade well. So how can you aggregate all this fragmented liquidity among these Bitcoin L2? That's very important. So that's another very, very important infra. So infra needs to mature, but infra very often is also teaming up with other partners in the ecosystem to build together. Right. So I would say, user friendliness, security in order for people to easily use a DeFi. That's number one. But underneath is really the maturity of infra, building with other people. But ultimately, you want the full financial service on Bitcoin that you can transact, you can deal, you can lend and borrow, you can issue your corporate bond, and you can tokenize your real world asset, the whole thing. That would be, in 5 years' time, that would be our goal.
I love it. Let me take you to the reverse. 3 years ago, you start building on DeFi on Bitcoin. But within those 3 years, we've seen another hype cycle. Bitcoin's back. Bitcoin ordinals are huge. How do you now stand out from all these other protocols that are running to Bitcoin to try and capture some of the attention, capture some of the capital? You've raised a couple of rounds, I believe, or raised at least 10 million in the last. How do you now stand out when everyone's running back to Bitcoin?
I would say it's very hard especially for startups in this space. There's so much noises, as you pointed out before. I would say the way we stand out is true to our mission and very laser focused on what we want to build. I mean, I like to quote my co-founder, Rachel, and my CTO. Every time I say, "Oh, this is interesting. Why don't you build this?" And they always tell me, this is not our core mission, right? You can capture maybe 2 weeks of attention if you roll this out, but it's going to dilute our resources, and the attention will be gone after 2 weeks or 1 month. So laser focus on what you want to build, and we want to build a Bitcoin economy that, those Nigerian moms, they save dollar stablecoin because they want to send their kids to school overseas. That's the biggest private usage of a dollar stable coin, private, in Africa, right? What do we do? How can we help them? We can issue now a Bitcoin L1 stable coin that is yielding so that they can save, right? So there are real use cases of our DeFi that we try to be really true to our focus and our intention.
I love that, because I think once you're building there, people are trying to come to you now and say, build this with us, build that with us. You're like, no, we've been building. You're not going to leverage what we've built. Lastly, let me go into something which I find very interesting. You're in New York, you have a huge presence in Asia and other places around the world. Token 2049 just happened, or is happening right now in Singapore, and it happens in Dubai as well. And everyone I know says, this is the crypto bro of all crypto bro conferences. And someone messaged me yesterday and said, it was even more crypto bros than ever before. I'm like, how is that even possible? What is your take as a woman? And we talk a lot about diversity on this show, but what is your take? What advice would you give to a woman that their first conference out is Token 2049 and they're looking around, it's intimidating, they're not getting very much, they're new to the field. What advice would you give them based on maybe some of the events you go to, or maybe just some of the communities you're a part of, and hey, this is a community you have to go to. This is where you'll see the real diversity in the industry versus this one conference.
Well, that's a huge question. Lots of the questions in this question.
Lots of questions in this question. But how would you help you when you just enter the industry and you're like, whoa, there's a lot of crypto bros and tech bros here?
Mm-hmm. Well, when I first went to a Quant conference, I was the only woman, right? So I'm quite used to being, one of the few women in the room. And how did I survive that? I would say number one is that passion has no gender. If you're really passionate about something, your surrounding people around you will feel that, right? Like when you talk to me right now, I think when we're in the middle of Bitcoin L2s and this, gender is not the issue. It's really about the topics. So passion has no gender, I would say. Number two is, so it's an interesting industry because it's 24/7. I find it actually more suitable to women than the TradFi, for example, right? Because you, at any point of time, if you are free, you can just jump in to participate in this particular sector. So we have more freedom in how we want to design our, daily lives, particularly for women. Rachel and myself. So Rachel is based in Hong Kong. That came to your question about we have a very big Asia presence. I call her DeFi queen, right? So in Asia, they were the first adapters of DeFi, right? So I learned a lot from her. Our CTO is also based in Hong Kong. We have developers in Korea, in bigger Chinese-speaking countries, and also in Europe as well in the US. So we are truly, I would say, global and also on-chain and online. That's the way we work. So we do have a big Asian presence. Coming back to women again, I would say build your own alliances, right? Rachel and myself, I would say we understand each other's challenges more than the dudes, right? Yeah. Your kids have fever, you just have to say, sorry, I'm offline, right? We understand each other better. It was always my dream to share a work with a woman. Right? You can again design your day like that. So if you're a woman, you are interested about crypto, pick the topic you are most passionate about. It can be digital art, it can be DeFi, it can be RW, it can be anything. Bring your own, value add to the space and you will be welcome. Doesn't matter if it's men or women or they. Right.
I love that.
Passion and knowledge. And build your alliances. Reach out to me and Rachel.
I love that. Yeah, like follow the people that have done it before you. I think people forget that there are people that have, already carved the way, carved the path. Before we end, you've already talked about your roadmap, and I'm actually excited about the Bitcoin stablecoin. I think that one's interesting, very interesting. But he did write an article that says Bitcoin doesn't need DeFi, but DeFi needs Bitcoin. I think that's first of all, you guys whoever your marketing team is, like tell them like, if that's you and Rachel, like heads up, you guys are doing a great job. You guys come up with really powerful statements. Even, passion has no gender. Like you guys are made for the punchline. But tell me about that article. Summarize that. Like, why doesn't, Bitcoin need DeFi? Why does DeFi need Bitcoin now more than ever?
Because by definition, DeFi is decentralized finance. There's no point to build on a chain that is not truly decentralized. And that's Bitcoin. Bitcoin is truly decentralized. You can be a node operator of Bitcoin with a very, very small investment, of certain CPUs. Truly decentralized. Nobody can shut down Bitcoin. So DeFi, I would say DeFi definitely needs Bitcoin. However, since we wrote that article, since we published that article, things have changed a lot. Now, I think I come to the conclusion that Bitcoin does need DeFi. Why? Because just hold that Bitcoin and hope the value will go up, that's gone. You need to make this chain useful. There should be use cases so that the miner and node operator will continue to maintain the Bitcoin. So you need activity. It's like a beautiful house. There's no point to expect the housing price will go up. You need to make the house, the garden useful. That's why I think I have changed my mind. I think now Bitcoin also needs DeFi. You need to have proper activities on this chain. Does that make sense?
No, it makes a lot of sense because, like, I'm big on flow. Energy is money. Money is energy and flow. And like, if you just have $60,000 in your bank and it's not doing anything, it's not going to do anything. Like, okay, the purchasing power might go up, which is definitely not happening. But you invest it. You use protocols. You lend it out. Like, you have to have that finance layer on top of it in order for it to be useful. And then like more opportunities come out, right? And yeah, there is a small risk to that, but what's more risky than leaving your money there and not having it work for you? I love that you said you switched your mind a little because you did write a book about rule-based investing in 2013 where you talked about emerging markets. What were some of those emerging markets? And, A lot has changed in 10 years when you're talking about technology and investing. Has anything changed since you wrote that book where you're like, whoa, I think I might need to make a part 2 to this because some of these concepts have been turned upside down due to technology evolving so quickly?
I would say, and thank you for reading my book. I would say that the concept hasn't changed, but technology has improved a lot, which make those rule-based investment strategies now much more accessible. What it means is that there are a lot of ETFs are based on those ideas. And then, so if Stephen say today, I think the value investing is coming back into a trend. I want to invest in a value strategy. In the past, it was not possible for you as an individual. Now you can just get an ETF or multiple ETF. So it become, I would say, factory, much more accessible to the mainstream, us mom and pops individuals. So that's number one. Number two is that applying this to crypto need to mature a little bit more, but some concept is definitely applicable. For example, carry strategy is very simple, right? Carry is just like a funding strategy. If you have more demand on Bitcoin or Ethereum, people are willing to borrow that. And then you get certain, you call it the funding or basis, or that's just carry, right? So that's carry strategy. If you have a Bitcoin, that's what you can do. And value is something that you can use certain matrices, for example, in particular DeFi strategy. You can go into the GitHub, right, to check, how much developers has written, this type of thing, and to come up with your own value matrices. So all these are quite applicable, but not yet into mass adoption. It would still take some time. I am really thinking about, after 3.5 years, I do have, in my mind, should I write another book? But not so much about rule-based investing, but more about this 3.5 years as an entrepreneur, as a startup co-founder, what I have learned, good and bad. What can I share to, the women or men that, having this mind of setting up their own, crypto project.
I
And
would love
also
that.
really? You would? You think that's an interesting
I
book?
think entrepreneurs can always take from other industries too. It might be crypto, and crypto's a lot harder industry than I think most of the traditional or Web2 industries. So I think there's a lot to learn, and a lot of people don't talk about it because they're trying to cover it up because they're still trying to build and make money. So they don't want to show we have a weakness here. This is what the challenges were. And this is why I love this podcast, because I get to ask people like, hey, what's really happening behind the scenes? Like, what were some of the real challenges? Like, how are you dealing with regulation? So I think whether it's a short book, a long book, I think putting all your thoughts down or starting your own podcast might be the way to do it.
Or you can start with me. But also, ultimately, I think the question about decentralization is not very well discussed because, as we know, as a project, you cannot from the get-go being decentralized. And then how much it really means for users. Everybody would tell you we love decentralization, but as soon as there's something that's easier to use, everybody just forget about that. Behind it is a huge centralized institution. Right. So that's another copy I think is quite interesting that maybe, we can spend some time to address it.
It's the same example I give about privacy. Everyone says they want privacy, but then they'll give all their information to save 10% off of Bed Bath & Beyond. They'll give all their information to get a discount code online, not even knowing what website they're on.
So, then your cell numbers.
Yeah, they'll give phone numbers, SIN numbers, like addresses, just so they can get like 20% off an Amazon book. Like, we don't care about privacy that much. It sounds good on paper. Where can people find you? Where can people interact with you? Are you crypto Twitter? Or are you more of a LinkedIn person? Where can people find you after they listen to this amazing conversation?
Oh, thank you so much. So I'm on Twitter a lot. My Twitter handle is rule-based invest. And Alex is, I think it's Alex Lab BTC. We use that as a public town hall for particular foundation member. They share all the news, all the update, all the new features with people, and easily you can reply. We are also on Discord and on Telegram.
Awesome. And we'll include all those links in the show notes. Shanda, thank you so much. What an amazing conversation. And we look forward to having you back when you write your book.
Thank you, Stephen. Really, thank you so much for having me. I'm very, very grateful to have this hour and talk about Alex and myself.
We appreciate you.